first thing we should discuss is climate change, in the sense that the spotlight is really on Australia now with these bushfires, the pictures of burnt koalas. The world is angry, the public is angry. What do you think should the response be from the Australian government?
Well, I think people are upset with what they've seen with the bushfires in Australia, and it's been a very, very unusual event. As you know, the Australian bush is designed to burn, but what we've seen this year have been unusual weather conditions. It's been the hottest year on record in Australia on average, and then during the bushfires themselves we saw record temperatures in some of those local areas. The images, of course, are ones that are very startling and quite shocking when you think about it. Not just the loss of the forests themselves, but of course the wildlife and the effect on the people that live there. So the debate in Australia is obviously amping up with respect to its intensity. I think we've got to let us get through the triage of trying to repair what's happened, and then that debate needs to occur, and it needs to occur quickly.
But you think climate change is the biggest risk for the industry?
Well, it's certainly come on to my risk register as the largest thing that we need to be thinking about as a company. So 5 years ago, climate change was not the biggest issue that we were dealing with. Today, it's by far the biggest issue, and it's in a number of areas. One is, of course, what do consumers think about the product that we're selling? And I think that's the most important thing. Is it a product that long-term the consumers want? Secondly, can we attract employees and new employees coming into the industry? Do they want to be part of an industry that at the moment is getting a bit of a black eye, to be quite frank with you, and I think unfairly? And then finally, of course, long-term financing for the industry. What does that mean for us as well? So there's a number of factors that we're having to deal with at the moment as we think about climate change.
LNG, Australia, Qatar, neck and neck, I believe, with your data and your numbers, for the biggest exporter. But LNG had a really rough 2019. There was a huge glut. What does this mean for your business?
Well, firstly, it really doesn't matter who's the biggest exporter at all. We're out there supplying as much as we can into the marketplace at the best pricing we can. Yes, 2019 was a tough year, particularly for the spot markets. You might recall that the previous year, Chinese demand really drove the market and drove pricing up. And in 2019, we saw quite a bit of softening in the spot market. We think 2020 is actually going to be a tougher year for spot pricing, not long-term contracts, but for the spot pricing. And that's on the back of some new production coming out of the US that really hasn't found a home yet.
What about China? Has the trade war hurt this LNG market? Because we know that China this year moved a little bit more to try to become a little bit more energy independent. They want to be so dependent on imports in the wake of the trade war. If they're not the big driver, are you worried about who's going to be driving that market? Well,
it certainly caused the Chinese to pause as they think about energy security. And energy security is first and foremost for any nation. And so with the trade war going on, the US actually becoming such a large exporter of LNG these days, and then suddenly to find tariffs put on that, I'm sure that caused the Chinese to kind of sit back and say, well, where is our sources of supply coming from? Is this a fuel that we want for the future? We're still confident that they are, because they've got alternative fuel sources, whether it comes out of Mozambique, Russia, Australia and elsewhere. But it certainly did put a bit of a dampener on the market last year.
In terms of oil prices, I know you focus your companies on gas, but you watch the oil price and you're seeing possibly 60, 65 for the year is where you're budgeted. When you look at events that happen like here in the Middle East, this escalation of tension, and you see the price rise so quickly and then really quickly evaporate, what does that tell you? Is there just too much oil right now around the world?
Well, it's an interesting question. We watch oil price very closely because our long-term contracts are linked to oil price, so it's an index price that we use. Yeah, what you were seeing in the market, I think in many ways you've got to be very thankful to Saudi Aramco and their ability to continue to supply into the market and not short any customers during that period. So I think people looked at the initial damage reports, they looked at the photographs that were coming out in the media, and I thought this will be a sustained outage, which is why the oil price went up. But as Saudi Aramco came out with a damage assessment and started meeting their milestones with respect to getting production back online, of course the market said, no, it's going to be okay. So that's why prices went back again. There was no real new supply coming into the marketplace at all. It was really just a perception of how long will the supply in Saudi be affected, and it was only a short period.
That was September, but what about now? The geopolitics we're seeing playing out in this region. I mean, analysts last week were saying this could trigger a war, this airstrike on Qasem Soleimani. You know, sitting in Australia, what do you make of that? Does this worry you?
Well, you know, from our point of view, in many ways, you know, we're not part of that. I mean, Australia doesn't get supplies out of the Middle East, so from a security of supply point of view, that's not an issue for Australia. Obviously, the spiking, though, worries us because, of course, consumers want predictable pricing. And if you've got uncertainty in supply in the marketplace, then consumers then go and look for other things. And as we've talked about the challenge of the fossil fuel industry, the hydrocarbon industry, and the challenge with renewables, of course, every time there's a price spike or there's uncertainty in the market, then it encourages customers to accelerate where they're moving to elsewhere or to spend money that maybe they wouldn't have spent otherwise.
That brings me with my last question. I want to bring it back to climate change. Everyone in the industry says gas needs to be part of that transition. The climate believers say even though it's the least burning fossil fuel, you're still burning a fossil fuel. How do you get them on board?
Well, it's true. It is a fossil fuel, it is still emitting, but it's significantly less than the alternatives. And if you look at the UK, for example, and the transition they've made over the last 20 years, there's a case in point that says moving away from other types of fossil fuels into gas really does make a step change. And it's really the only fuel where you've got a large supply that can supply the market in the time frame that's required to meet the Paris commitments by 2050. So it's not an issue of, are there other supplies out there? The reality is they're starting from such a low base, and every day is an important day. And if 2050 is really it, then gas has to be the fuel that does that for you because it's the only one in plentiful supply that we can get into the marketplace.